All right. I think we're good to go. We can start. So I'll start with the intro for today. So welcome everyone to another webinar. Today's focus on handling crypto payments and scaling Web3 operations. So for any CFO in Web3, I would say optimizing accounts receivable and accounts payable. The process is kind of top of mind priority. And the use cases I'm referring to here would be billing and invoicing clients for goods or services rendered, managing your payroll and token allocations, approving and reimbursing expense claim, dispersing grants and bounties. So if you're starting out as a CFO, I think figuring out everything by yourselves can be quite daunting and time consuming. So our guests today are well positioned to share their experience and knowledge as they're currently handling payments in crypto. Today we have today for the webinar we have Michele Dagliesi, the CEO and co-founder of Superfluid, a payment streaming protocol. And for those of you who are not aware, Request Finance integrates with Superfluid, which therefore also allows you to have your invoices paid every second. We have Jozef Vogel, the financial controller from Aave, a decentralized crypto lending and borrowing platform. And finally, we have Jaime Barriga, the CFO from OpenZeppelin, which is an open source platform for building secure dApps. That is, it helps you to secure and automate your smart contract operations. So the agenda for today, we'll speak about handling crypto payments, on-ramping and off-ramping processes, the different toolings our members are using to scale their crypto payment operations, barriers for adoption, and then at the end, we'll have a 5 to 10 minutes Q&A. But do feel free to share your questions in the chat bar. We can pick them up also along the way. Of course, I always have to share a disclaimer that this webinar content is for general information purposes only and is not a substitute for consultation with professional accounting, tax, or legal advisors. Before I share what we do at the Web3 CFO Club, I'll let the speakers introduce themselves. So Michele, could you start by telling us a bit about your current role at your company?
Of course. Thanks for having me. My name is Michele. I'm currently co-founder and CEO at Superfluid. My experience has been for the past 10 years in tech startups and in blockchain since 2016. At Superfluid, I'm managing the team and I'm in charge of the operations, which includes some of our blockchain operations as well. So very much excited to talk with the other panelists today about, in general, crypto payments and how the industry is progressing and servicing the business-to-business world as well.
Awesome. Thank you. And Jozef?
Thanks. Yeah, I think you gave a nice little background on Aave, but my name is Jozef. I am the financial controller for the Aave companies. My background is in finance and operations, and I really love this position of bridging the gap between finance and the digital asset space and making these Web3 or DeFi tools easier to use and understand for the wider group of professionals in this community. I've had the opportunity of working with some incredible people, both on the Aave co-side, along with many of the founders in this community, creating some awesome products. So just happy to be here and discuss some of the issues or resolutions to building out this system. So amongst many other things, I also work on economic models, strategy, operations, implementing financial systems within the company. So thanks for having me today. I'm energized to be here.
Thank you. And lastly, Jaime.
Sure. So first of all, thanks for having me, Umar, and the rest of the team, and great to be sharing the panel with both Michele and Jozef. I'm Jaime. I'm VP of Finance and Operations at OpenZeppelin. I joined the company a couple of years ago. We're still a small team, and I basically started setting up the finance team, and then failed up to taking over basically all of our backbone operations. I come from a pretty traditional finance background. So I worked for about 7 years in investments in private equity, and then I spent a few years doing strategy consulting as well, before I decided to make the leap towards Web3. It's been an interesting journey the last couple of years. I think there's been a lot of progress in everything around the finance tech stack. A couple of years ago, figure things out such as payments, building everything was very, very complicated. I think now we're in a much better position, but looking forward to sharing some of those learnings with all the audience. Thanks for having me again.
Thanks, Jaime. I think it's worth sharing every time we have a webinar about what we do at the Web3 CFO Club. So it's a community of finance and operation leaders in Web3 created by Request Finance. And basically we have two objectives with this community. First is to share best practices for Web3 financial operations and to allow yourself to network with your peers in Web3. Today we have 500 members plus members. It's actually growing quite fast. Lastly, before we start, who am I? So I've been tasked to help grow this community and to organize different initiatives like the webinar we're having today and other our IRL events. We just had an event in Amsterdam last weekend, and I was sharing earlier that the next event is already planned for Monday, 17th July during ETH CC in Paris. So do mark your calendar for that already. I'll be sharing more details soon. Lastly, last year we published a guide called the Web3 CFO Guide, where we spoke to 250 plus finance and operation leaders in Web3. And this year we'll be publishing the second version of this guide, focused more on treasury management. So if there's any one of you who would like to contribute to this guide, feel free to reach out to me on Slack. So with that out of the way, I'll stop sharing my screen and we're gonna dive straight into questions. So the first topic is on handling crypto payments. I want to ask you guys, what are some of the main use cases today at your company for accepting as well as paying in crypto? And first we'll start with the use cases, but also speak about some of the key challenges that you had to overcome to set up like a smooth process every month. Can I ask Jozef to start?
Yeah, of course. So I think some like typical use cases, I would say it's probably pretty standard. It's typical items, paying vendors, grantees, service providers. And this would just typically be done in stable coins for the most part. Primarily for us, it would be on mainnet. But obviously this is kind of now scaling to either side chains, L2s, or other options with kind of increasing fees, and then also the advancements of our own internal system, allowing us to kind of handle these different channels of payments. And then you have, I guess, your monthly, quarterly employee tokens, if that's within your company payout structure, and then other various ones like maybe you're minting NFTs or memberships or paying out sponsorships for events. I think for us, the biggest issue, or from what I kind of found as the biggest challenge initially, was integrating like a subledger that would allow you to essentially track all these payments and then just perform your recs as you normally would with like a traditional bank account. Obviously, you don't have like a direct integrated feed that you might with like a typical bank or TradFi structure. So just to be able to track all those wallets, I think was like the initial challenge. And I might not go into that too much yet, but I think that was kind of the first learning as you start to make all these payments and then you look back and you actually have to record them or analyze where they went and then match it off. I think that's like the realization at first for a lot of people within this space, where you kind of determine that you need a different set of tools to be able to manage this.
Just a follow-up question on what you currently said, like a crypto accounting solution would be, I would say like crucial to implement in your like financial stack when you do on-chain accounting, right?
Yeah, for sure. I mean, you still have like your typical ERP system, but I think depending on how someone wants to build it out, I think there's some really good tooling around that that's now starting to be integrated in and allows you to kind of abstract that and analyze that outside of your ERP and then be able to push it. But yeah, that's what I mean.
And Michele?
Yeah, I think I can only second what Jozef just said about, the blockchain is this amazing public record that is transparent and auditable by definition, but it doesn't necessarily hold the type of information that are needed for compliance. And so there is that mismatch where you have to find a way to understand which transaction refers to, who is the counterparty, et cetera, which is not immediately intuitive from an accounting standpoint. But I think, in terms of payments and in terms of, what are the main use cases for, paying in crypto, what we've seen is that international transfers are slow and expensive. And so that's kind of blockchain allows that one-stop shop where it doesn't really matter where you are or, and there's no intermediaries. So the payment is settled in minutes or seconds internationally. And there's no intermediary. It's quite cheap depending which chain you're using, right? And so there's a lot of businesses that are realizing that, and they are, potentially using that as a faster and better payment infrastructure than what we currently have. That takes 5 days and few points of percentage fee, et cetera, et cetera. So it's kind of where I would say the killer app of crypto is in the kind of real B2B payments world. And also, the kind of added compliance is that you have to do your own KYC and KYB, and that is like added overhead, but we can easily delegate that as we have the delegation of that when you open a bank account with a new fintech startup. There's all these companies that do ID checks, et cetera, and check against all the sanctions lists and so on. So hopefully we're going to have that type of infrastructure to emerge. Another item was invoicing. So very, very excited that, there is a company out there called Request Finance that does the invoice for crypto payments in a fairly automated way. And so hopefully that, is coming all together to create a suite of tools that allow, businesses to both take advantage of these rails and do so in a fully compliant fashion.
And Michele, can I ask you, currently at Superfluid, what are some of the use cases for handling payments in crypto?
So I mean, there's a range of them. I can't specifically talk about Superfluid, but in general, we have seen bounty payments for hackathon prizes or any sort of like outsourced package of work that the community in crypto can pick up. Then there is clearly team compensation. So some team members prefer to be paid in crypto. Also, contractors sometimes they want to receive cryptocurrencies. If you happen to work in a project where you have your own token, then also these kind of token payments can also happen clearly in crypto, because it would be quite a hard item to do them on fiat rails. So those are kind of the major use cases. But at the end of the day, we are seeing more kind of merchant tools being developed and used. So now I think 2023 is going to see the emergence of real subscriptions. Where you have a checkout-like flow, where you would basically go to any website of a SaaS company and basically pay for the premium with a crypto transaction, right? And those are recurring payments. So for Superfluid, they are especially interesting because we could basically enable subscriptions with streams with no recurring gas fees or no need for recurring transactions. So we have kind of looked closely at this space, and we have seen that these kind of subscriptions unlock the same type of growth for crypto that SaaS enabled for the internet growth, right? So when we transition from one-off e-commerce type of payments to SaaS subscriptions, a la Netflix or all the software we're using today, they're based on monthly subscriptions. The moment we can do that smoothly with a beautiful UX in crypto, then hopefully would unlock the growth of sustainable recurring revenue for the DAO space, as in, they wouldn't need to rely only on selling a token and maintaining a treasury and navigating a bear market with 90% contraction in price, because they actually generate recurring revenues on a subscription model. So very excited to see a lot of those projects pick up subscriptions as a mean of sustainable growth.
Thank you. And Jaime?
I don't know if I have much to add after what you guys already shared, but I think it's pretty similar. I mean, our business model is pretty straightforward. We offer services and then have a couple of products that we offer as well. So in terms of accepting payments is basically just regular revenue invoicing. I think the big change that has been happening the last few months or so was we've tried to anchor as much as possible to stable coins and mostly mainnet. But in the last few months, obviously, with all the new L1s, L2s, etc., you see different projects wanting to be able to pay on different networks. And it's something that you need to get around if you want to offer some of your clients flexibility. And in some cases, it's fairly straightforward. In some cases, you need to figure out, what's the right bridge to set up. And so there's just so many networks that it starts to become a little bit complicated. On the more outflow side, fairly straightforward. I mean, it's just paying some of our team members. We provide the flexibility to pay them in crypto as well as to some contractors. This was a very painful process for us in the past, but like Michele said, like as soon as requests started to get in process and everything, just moving out all the process considerably. And now I don't think we see it as a paying process anymore. It's just a regular payment process, as if you were talking about Web2 or whatever type of TradFi solution that you will be using. So that's kind of like our current setup.
Thank you. One of the other pain points that I often hear is on on-ramping and off-ramping, I would say. So for companies having their treasury in crypto, if they did their fundraising in crypto or DAOs, or also if you're earning income in crypto, off-ramping would be a recurring activity. I want to ask you guys, do you use on and off ramps on a regular basis at your company, and what's like the setup that you have, and how did you arrive at this process, basically? Jaime, if you want to go first.
Yeah, I can go. I think in our case, it's, again, fairly straightforward. We're not doing off-ramping and on-ramping on a regular basis. We might be doing it maybe a couple times a month at most. We thankfully have some sort of like natural matchup in terms of, what we receive in crypto is usually enough to manage the payments that we have to do in crypto as well. But it does happen. And so we haven't really spent that much time trying to figure out, a sustainable recurrent solution that can automate a lot of that process. So we use basically, two different channels. We either use Circle to do the off-ramping, or we'll just do it through Coinbase. And it's more off-ramping. We're not really doing that much on-ramping. Something that we are working on right now is, so one of our products, Defender, which is a subscription-based product. In the past, we've only accepted crypto payments through purchase orders. And we're now working, again, to Michele's point, to figure out a way on how we can automate that process as well and allow some of our customers to pay directly in crypto. So we're exploring a few options to try and figure out how we do that off-ramping in that case, in case it's needed, just to have, more level of flexibility to offer to our customers.
And Jozef?
Yeah, I think we're probably kind of in the same grouping there, maybe a handful of instances per month on like the off-ramping cases. And that would just be through a couple of the typical channels, whether that's exchanges, like the tier one market makers, or either OTC desks. I guess some advantages with some of the like tier one market makers is you can get pretty sharp rates for off-ramping from like digital assets into other currencies as well. So I mean, you could even do like a USDC to EUR, for example. And if there's like enough liquidity with that tier one market maker, that might be a nice use case. And then I guess trading with exchanges as well. I mean, it does depend on the volume. Just kind of trying to think through, I guess, some of the most efficient processes, and that can start to eat away at the rate you're getting. I mean, you can do limit orders, but then there are some additional challenges as well with exchanges that have kind of come forward as well. If you're sending from one of these exchanges to your bank account, does that also flag something down the road as well? So there's a few other considerations with exchanges now. So I think there's also some banks coming forward. I can think of some where you can basically off ramp directly from your account. So there's some other options now. And I guess Circle was mentioned. I'm hopeful that one continues to kind of advance forward, and that's another one again that we would look to use. So yeah, I think there's a number of options, but I think as well now. A major fact is the liquidity conditions have changed somewhat since this time last year. So it makes it a little bit more difficult, and it makes kind of building this process out a little bit more important. We've seen a lot of pullback on the exchange or DEX liquidity. So it's not as deep as it used to be. So these channels have come kind of, yeah, I think you have to think this through more than you used to. So some people use OTC desks. I guess that might give you a little bit more peace of mind to have that delayed settlement as well. So I think there's a few options that you can use now.
A follow-up question on that: has opening bank accounts been a challenge, and any learnings from having like diversifying, I would say, your bank accounts?
Yeah, absolutely. I mean, redundancy is so important here. And if I guess we didn't know that before, we definitely do now. I think there's definitely challenges, but I think the approach that you take is quite important. And I think there are options there. I think you have to be a little bit more creative maybe than you were in the past, and think outside the box a bit.
Yeah, that's something that needs to mature. So I think that, looking at the whole space, and specifically to on and off ramping, I feel that the companies that are operating in the space tend to kind of compartmentalize crypto with crypto and fiat with fiat to avoid having to go from one to the other in any possible way. And the reason is that we are still surrounded by a rather unfriendly environment when it comes to the banking industry. And we have seen with Silvergate and a few banks in the US what happened there. It didn't sound like a coincidence that those three banks were the three ones that were actually supporting of this industry. And so, yeah, it's been rather challenging to open new bank accounts. I think it's been for everyone in crypto, and it will most likely continue to be so. So that kind of goes hand in hand with on-ramping and off-ramping, because most of the banks that are still supporting crypto, they don't really accept those kind of transactions to and from exchanges. And for how this is kind of counterintuitive and somewhat puzzling to me, we have a blockchain which is public and auditable, and yet it's kind of hard to prove a source of funds when they come from crypto over to fiat. And sometimes it's very clear to us, but then if you have to reconstruct all the chains of exchanges before the transaction you received, it becomes kind of almost impossible to reconstruct it all the way to the beginning, right? So that is probably one of the educational items that we need to work on as an industry to make sure that we are seen as absolutely as financial actor or business actors that are working to advance society in a non-shady way. If you remember the shadowy supercoders back then, we're not. We literally are just an industry. There's no shady going on, and it's important for us to educate both the public and the financial sector that our technology or this technology can advance the current financial system substantially to the point that it cannot be neglected or fenced off, right? So yeah, I think on-ramp ramping and opening bank accounts still is something that we can work on as an industry a lot more.
In a not so distant past, I used to be an external auditor, and at the end of the external audit exercise, we would provide the company or a client with a management letter A management letter basically contains a list of findings and recommendations on internal control, on their internal control. So for any one of you who's recently closed off the external audit exercise, I want to ask you what have you learned on some of the internal controls that are key to have when running a business on crypto? It can be around off-ramping, on-ramping, but not necessarily. Have you learned anything there? Because I've also been an accountant, and after the audit, we would actually have way more work on improving the internal controls of the company. Jozef?
Yeah. Okay. Well, yeah, I have that background in audit as well, so I've kind of seen it from both sides. But I think there's a number of things you can do, and it kind of resembles what we would have traditionally done as far as segregation and building out controls around the financial process. So whitelisting addresses is one that I can think of. You have your dual authentication in order to whitelist an address to extract anything off the exchange, or actually to send anything to an exchange in the first place, is where you kind of build out your Gnosis safe authentication kind of tree. Test transactions as well is kind of another simple one. That's quite common practice within the industry. We have the multi-sigs, and if you're using like an MPC solution, they can kind of allow you to build out like a nice tree of approvals as well. And then you can build in single address books into your Gnosis safes, or something similar depending on what you used. And then ultimately, I think what I had mentioned originally, it kind of comes back to that subledger as well, and just making sure that you have all your wallets within your subledger, and you see all the activity that happens on every single chain, and exchange for that matter as well, so that anything that actually does move, you can account for. So it's just kind of having that full oversight and the holistic view of everything between all different entities, and all different wallets between those entities. So I think there's probably a few different items, few different ways you can go, but I've found those ones to be the most effective so far.
Thank you. And Jaime, feel free to chime in if there's any internal control measures you found, like, I mean, it's new and it's different when running a business on crypto rather than just having fiat in at your company.
So in our case, we haven't gone through an audit yet, so we haven't really received that type of feedback. Having said that, in terms of approval processes and internal controls, honestly, like what we've been doing is just try and replicate a lot of the best practice that already exists in Web2. It's just making sure that the person that's probably doing the review is not the same person that's executing the payment, that for certain amounts you have more than X, Y, Z type of signature type. So it's mostly that, and it's taken some time for us to kind of like find the right tools that can do that for us, instead of us trying to do it ad hoc. Before we kind of like, we had to be creative with a bunch of these different things, and so when we had for example 2 FAs in certain platforms where only one would have the code and then the other one would have the password, so we needed to kind of like create the processes in the back end until some of these alternatives came up, and now they facilitate much more the process. But at the end, I think it comes down to that, is just figuring out what those best practices are and try and implement it, hopefully as much as automated as they can be.
Yeah, I second what Jaime said, because the reality is that a lot of what is best practice in Web2 can be ported over to Web3, right? In terms of processes and controls, etc. I think the challenge lays on the new. So to give you an idea of what the new is, in my mind, is in fiat payments, we have this massive distinction between software that executes services and actions and payments. They are two different things. In crypto is the same thing, is your wallet. Your wallet can make a payment and transfer funds at the same time you can play a game with that. And the transactions that you make on chain to play the game are exactly the same as you would when you move some tokens. Now, one of the key best practices, I guess, is segregating company funds on wallets that are used exclusively for transactions or company actions. And we can see that exploding substantially, for example, with smart contracts, which is also a new item of Web3. So one of the questions I have for you two guys, or even you, Omar, is how do you manage funds that are in the limbo of a smart contract that are not yet burned to gas, but are still company funds? But you can't make use of them because you can't withdraw them from the contract because maybe it's non-upgradable. So we have seen projects where smart contracts are essential part of their service or protocol, and you need to fund them gas. But then once you do, you cannot recover the funds, and that is unclear if that's an expense that has already been paid out of the company accounts, or is it still in the company's wallets, right? So there are those limbo situations. They are all over Web3, and there's no guidebook. So basically, we get to write it, and we don't have any guidance. We don't have guidance from regulators. We don't have any guidance from accountants. It's a complete new territory. So I think that the only best practice we have in those circumstances is to document it, so that it's very clear not only what has happened, but also why and what was the decision making, so that eventually we can reconstruct it. But that's kind of as far as we have gotten. And this connection, this mix of actions and payments sometimes is quite tricky to handle without proper segregation.
Yeah, I don't know if Jozef, you'd like to answer that question from Michele.
Yeah, I mean, I don't have an answer. I think I probably go through the same process. It's literally just documenting what you think, talking kind of internally, and trying to just back your approach and try to work your way into like a solution that you feel is adequate. Because you're right. I mean, if you go looking for any kind of solution online, you're not gonna find anything. Like it's just not available to you. And I think the same thing also. I mean, even if you're talking about gas, like sending gas to like an EOA, and when you record that expense, because now we're talking about the right to ownership, and does the company really own that, or is it now the employees? So there's a lot of these kind of nuanced situations where you either, I mean, you can lock funds in a contract for a while, and how do you, I guess you can confirm that you'll get them back, but an auditor doesn't always believe you. So I think it's then like the educational piece to the auditor. And I think like as far as the documentation goes, and if you really support your position, I think that kind of goes a long ways. And I kind of bridge that over even from like the traditional world as well. And whenever it was kind of a nuanced situation, you just make a really good argument, and I think you can kind of persuade.
Yeah. I want to move on to speak about tooling to scale your operations in crypto. So for the new CFO out there, just starting to dabble in crypto, I would think it's quite overwhelming, like to find the right tool. And like 2 years ago, a year or two ago, there wasn't that many tools, but now there's quite a lot of tools to actually run your operations in crypto. I want to ask you guys, how does your crypto toolkit look like for invoicing, payments, and other crypto operations activities? Jaime, if you'd like to start.
Sure. So as I was saying, like in the past, a lot of these processes were being done manually, but there's been a lot of additional tooling in the last couple of years or so, and so we've relied a lot upon request. To be honest, we basically channel all of our invoicing, all of our payments using request, and then we have I'm guessing pretty traditional setup in terms of using safe and multi-sigs for approving the payments that are tied to request, and then in the back end for more like the crypto accounting and the subledger, we use crypto. We do have a traditional ERP as well, so but all of that is today all of that is pretty much connected. There's obviously some work that needs to happen around tagging and making sure that the reconciliations are in place, but at the end of the day, like the process is pretty smooth across the three systems that we have today. So I think we're today I think we're in a pretty good spot in that regards. again, I would say like our operations are fairly simple. It doesn't, it doesn't really require much more than what we've managed to set up by now.
Thank you. And Michele?
Yeah, I mean, like 2 years ago, there was no tooling, so it was entirely like Excel files and manual processes. And luckily, over the last 2 years, we've seen a whole industry emerge around B2B tooling or tooling for managing crypto payments. I think that one of the first issues that any project really encountered was invoicing. So I guess Request was there early on to respond to that. But then the other type of tools we have been looking at in trying to investigate on onboarding are of two categories. Either they are basically accounting related, so they do provide a lot of information about what's going on, and potentially clustering, et cetera, and reporting on top of that, or they are kind of treasury management / wallet type of related. So they allow you to act upon the payments, but they don't necessarily do all the reporting side. We didn't see a lot of specialization. Like, we still have to see a fully fleshed out payroll for Web3, where you have the compliance side, the tax withholding side, and the payment side and the reporting side in one single place. And so we didn't see this specialization happening quite yet, which would be very useful. I would say, if we had a deal or a remote.com that does entirely run on Web3 Rails. But the reality is, if I have to be brutally honest, is that we don't want to see any of this. As in, these tools should be in the background. What a company normally uses are, software like Xero or NetSuite or QuickBooks. And ideally, because we need to live in the traditional world, we would have the crypto information fed into those tools in the smoothest way possible, so we don't even know they are coming from a crypto rail. That is, I think, is our dream, to have everything reported down to one single source of information, where then the reporting happens on Xero or NetSuite. It doesn't, I don't want to replicate it into 5 different tools. So, if we could have those sort of plugins that run in the background and we pay a subscription for them, but then everything is abstracted into that one tool that it already needs to be there to manage bank accounts, that would be a bit of a dream come true, because then you have one place where you control everything. So we have seen lately a lot of accounting tools on crypto. They're trying to build reporting and build labeling and add information to the transactions, but then it's kind of a hassle to bring those into the main basket of the accounting software that we use for normal payments. So it's kind of trying to get these two worlds stuck together has been quite hard. So in terms of tech stack, it's good to have at least one invoicing / accounting option, and then one major kind of wallet operational option that allows you to make payments and actually do transact. We love Request because it does both. It does the reporting in a way because it does the compliance because you issue the invoice with it, but also you can do the operational part because you can actually create payments from it. So we'll see how this evolves over time, but there's been so much activity in the last year or maybe 8 months that we have seen 20 kind of crypto treasury management tools approach us in the last 3 months or so. From a sales point of view, trying to get us to be their customers. So it does feel like we are accelerating in the industry, and innovation is definitely around the corner.
Thank you.
Yeah, I think I would agree completely for the kind of the central source of truth. I think that's kind of the one aspect that we really have to hone in on. And a lot of these solutions were built thinking that they were going to be that source of truth over here, but the realization is everyone kind of needs to flow everything back to their accounting system, and then we need to try to find a way to either make payments out of that, and then find a way for those payments to ultimately come back and be marked as paid, or however you kind of want that flow to work. But it's that full integration that I think actually, I'm quite hopeful. I've seen a lot of advancements in that over the last little bit, and I think that's what a lot of these solutions are now trying to solve. And I think there's some nicer, I mean, there are obviously some nicer UI features. You're starting to get like the user experience that sits on top of Gnosis and allows your payments to be a lot more easy to flow through, and you can export Excels and CSVs out of your traditional ERP system and have that automated as much as possible. So I think now we're starting to bridge that, and it's getting closer and closer, and we're getting less human intervention into this, because I think a lot of this before was very manual, and you'd have people entering addresses individually, and I just know from like an approval standpoint, it was a bit of a nightmare going through this. But I think now that that's kind of abstracted away, and you have a lot of people operating in these nice interfaces where you can start to get those. Yeah, I think it's started to get to a good point.
Yeah, I think if you have, I mean, all your assets are on chain, but which is rarely the case for a company. I think you could maybe use only crypto accounting solutions, but this is rarely the case, and you would actually need like the traditional main ledger, because probably you'd have to run your depreciation every year, your amortization on your intangible assets. So they don't really accommodate for that yet, those crypto accounting solutions. Not yet, but I'm sure it's going to come with time. NetSuite, QuickBooks, Xero, these companies have been here for decades, and they kind of function quite well, actually. So, yeah.
Yeah, I might be traditional in this sense, but I do still like the traditional accounting system. I know maybe that might be controversial, but I think like I know them well. Like I think it's quite built out. So, Kelly, go ahead.
Yeah, I just wanted to say that, you know, for companies that are using crypto entirely in stablecoins, is a little bit easier, because you can claim those to be the underlying currency, like the dollar, pound, or euro, and you can use that in your accounting software like Xero, and there's almost no issue. But the moment you start introducing gas fees, or in the gas token, or you know, or assets like Aave tokens into your balance sheet, or even worse, that NFT drop that landed in your account, and now you have a punk, and that is appreciated and is a company asset because it was dropped into your wallet. You know, those are assets that regular accounting software will almost never be able to include in their list of assets. So I guess that, you know, from a kind of business operations point of view, managing stable coins, assuming a one-to-one peg with the underlying, is so much simpler than, you know, managing crypto as a whole. And so, you know, I think there's a long way to go for all the accounting softwares I've seen so far. Even they struggle even just to categorize these as assets onto Xero, for example, or other softwares, right? And then manage those journals in a fairly automated fashion. So, you know, it still is challenging. I think a lot of, you know, CFOs and controllers have a lot of headaches around those assets.
I think so. An important takeaway from how I've been listening to you guys. So when you have your transactions on chain, so you actually don't need that many tools to like operate your business on crypto. And for like all the CFOs who are just now starting to use crypto in their operations, like you need a self-custodial wallet, you need a wallet, then you need something for your invoicing, payments. Then I think the key tool that you also need, as you guys share, like a good crypto accounting solution to be able to automate and label like all those transactions and push it to like your main ledger. So there could be like some other tools further down the line which makes your life easier, but from my understanding so far, even though I'm not a CFO, but from my understanding is those are like the tools you would need. Yeah.
Maybe there's one more thing more that we can also touch upon, which is not all solutions are tools. To give you an idea, you know, if your company has more than 50 employees, you definitely are outsourcing payroll to a payroll company. So even in the fiat space, you wouldn't run your payroll yourself unless your company hits such a large number that you have your own internal payroll team in your operations team. But we've seen a lot of companies outsourcing payroll entirely fiat because you have to issue pay slips, you have to do compliance, you have to do the payments. It's just a headache internally to do. It's also a lot of overhead rather than added value to the business. Like nobody is in the business of paying payroll. Everyone's in the business of building their software or service. And so one solution could be the emergence of those full delegation type of services, right? Where we don't touch the crypto, we don't make the payments, we literally just outsource that to company X and they run the payroll for our team in crypto. And that kind of service is something that could speed up a lot of those payments, because then you have a specialization of that company to manage them. They maybe even build their own software if need be, and then all the other companies just use that as a service. So that's something that also can happen, which is unrelated to tooling. And yeah, we'd love to see some experiments in this direction, because there's not many out there.
Yes, my last question for today is on the different barriers to adoption. I have a general question, but also one more specific to Superfluid. So I'll start with you, Michele. One of the barrier that I see from my experience of using Superfluid is, and I want to know like what the other users of Superfluid, how they go about this, is regarding the unwrapping. So from the super token to the RC20 token once paid, as so the super token cannot be off-ramp to fiat. You first have to unwrap it. I want to ask you, what are some of the processes and setups like people using Superfluid have to unwrap, like on a monthly or other recurring basis?
Yeah, so there's two answers to that. One answer is that you don't need to, as in if you need to go to fiat and pay your rent to your landlord in cash, then yes, you have to unwrap. And for that, we are trying to plug directly into exchanges and tools like Coinbase or Binance or others to accept the wrap version as well as a one-to-one wrapper of the underlying currency. So basically, you would be able to go from the wrap version directly to fiat. Our dream lately is to get a card issuer to accept super tokens such that you can stream into your card and then buy groceries with that, right? So that you refill the balance of your crypto card with a stream and you don't have any unwrapping. It's fully abstracted from you. It's just a call in the backend for that provider, so it doesn't hit the user. And the other answer is that if you don't need to actually go down to cash and you want to spend your tokens, we have built a whole economy that allows you to spend it directly in super tokens, right? So you can just receive your super USDC in a stream, and then you forward that on to the provider that you want to pay to. So, a couple of weeks ago, we announced that we have built a developer toolkit to build subscriptions checkouts. We'd love to get your feedbacks on it. It's literally just a bunch of code, SDK-wise, that any developers can pick up to build a checkout such that you can stream to pay in crypto. And we have seen already 2 integrations from tools that are building some sort of recurring billing service with attached invoices a la Stripe. And so, because if you receive a payment, say in a stablecoin, and then you end up paying one of these merchants, then game on. You don't need to ever go down to unwrapping or fiat ever. So that's kind of a direct usage of the super token, and the more is clearly a strong network effect. The more merchants that are using the system, the more companies that are using it as a payroll provision, then the less there is a need for wrapping and unwrapping entirely. So effectively, you can see that as just an announcement of ERC20 because it's fully permissionless and it's decentralized and so on. So effectively, there's not going to be such a strong need to wrap and unwrap, hopefully. But for those that still want to do it, we'll have integrations with the major wallets and exchanges so that you don't have to go through the wrapping process.
Thank you. And for Jozef and Jaime, I have a specific question on recruiting talent because I saw that there was recently 2 vacant positions at both of your companies. I saw at Aave, you recently had a vacant position for financial reporting manager, and Jaime at OpenZeppelin, you had a finance controller vacant position, if I'm not mistaken. I want to ask you, has it how challenging is it to recruit accountants with crypto knowledge? And once you've been able to find the right candidate, how does the onboarding process looks like? Maybe Jaime, if you want to go ahead.
Yeah, sure. So I think so. Starting with the, how do you find the right candidate? I think there's a couple things. One is, more the technical aspect, and then second is, from a cultural perspective, is there's going to be a match at the company or not. From a technical perspective, obviously, the more knowledge that you can have around, general crypto accounting and systems and everything, the better. But I think that a lot of those things can be learned, right? And so it's just, finding the right candidate that has, that shares the same values and has, that same level of curiosity, of knowledge, learning capability, etc. And then all the other things, leveraging the internal team and probably some external resources that we use. Like, I think the person can get there, but I think what we found challenging when recruiting for this type of roles is really finding a person that matches the culture, that's here because they're aligned with the company's mission, that they're aligned with the Web3 ecosystem as a whole, and that's been a little bit more challenging. And so when we go through the interview processes, etc., a lot of times is a lot of hype or whatever that may be, but there's no true genuine interest as to what we do or why we do it. And so that's what we found more challenging. And it's not specific about a finance controller, but I think it's everything that's non-technical roles. We kind of find that similar challenge. So for us, it's more about finding people that are more aligned with our culture, that do have a certain level of experience, and then we'll figure out a way internally to help them get to the point where they should be. That's been our approach. In terms of onboarding, it really depends on the level of experience that the person has had in the ecosystem overall. For people that are coming, just right out of the blue, it takes a little bit more time. But again, I don't think it's rocket science, and as long as all the documentation and all the commitment from the team is there, I think it's something that can be manageable.
Yeah, I think it's well said on the cultural aspect. I think you really try to find people who want to learn, and you try to kind of extract that through the interview process, because I think you're gonna naturally find a lot of candidates, especially on the accounting side, who have extensive knowledge in financial reporting, and maybe they've audited a digital asset company in the past. So they might have like a very basic understanding. Maybe they have interacted a little bit with the protocol, or they have a MetaMask wallet. What they kind of find out is once you actually get involved and you see 100+ wallets and you see a bunch of activity and some like LP swaps, and then you get kind of then that next level can really shock someone. So I think like just to have someone who like embraces that and has a general curiosity, will ask questions after the fact, and just continues to want to learn and improve on that, is probably one of the most important facts, because it will continue to change too. Like, I think I have a good understanding of on-chain activity, but give it a week and I might feel like I don't know anything because something changes, and then all of a sudden the way we want to report something changes, and you have a different perspective on how you want to do it. So I think obviously it depends on the position you're hiring for, but I still think a lot of this can be learned. And I've even seen this with some of the AP processing side. We had someone come in, traditional background, and like he had left, he got another role, but I talked to him after the fact, and like just his experience through a year of learning like the Web3 world, how much he liked making payments on chain now versus like bank accounts. It changed completely from someone who was very green initially. So it's interesting to see like the people who have a genuine interest in and how far they can move along in this space if they're willing to put in that work.
I have a follow-up question, Jozef, but in the meantime, I'll just ask, we have 5 minutes left, so I'll ask everyone in the audience, you've all been pretty quiet today. So for the last 5 minutes, if you have any questions, please post them in the chat bar. one of the follow-up questions I had, Jozef, was because you were like accountant Web2 before. So for that accountant now, Web2 accounting coming to Web3, what would you consider as like the foundation knowledge to get to understand when starting to do like on-chain accounting? From my understanding, it's like having understanding how block explorers work, basically. Like accountants don't usually, we're not like data people. We are, but you definitely have to upskill yourself when you come to crypto and have to start understanding block explorers.
Yeah, I think that's a big one, and I think that's where you kind of end up spending a lot of your time. One of probably my biggest pet peeves is the function calls and how every single one is so much different, because all I want to do is just run a rule-based automation over everything and have it all quite simple and have everything on chain easy to read. But I think that's probably one of like the most complicated things that these new users will run into is you go into a swap and every swap is called something different, and sometimes it's not even called a swap, but it happens to be. So I think like uniformity of contract function calls, I think is a tough one for people to first understand. So I think like initially you don't just throw someone into that. I think you can kind of start light and you just show general payment transactions. I always try to just keep like Web2 analogies and just treat like a safe similar to a bank account. You have multi-sigs, and there's a lot of comparisons that you can make throughout the training process that I think is quite important for someone just to simplify it, because there's not only that aspect, but there's all this new tooling that we kind of discussed throughout, and like this whole new tech stack of stuff that they may have never seen before. So I think it's like really trying to simplify the initial onboarding and not just like throw everything at them and expect them to just hit the ground running. So I think it's kind of a slow transition process that us as an industry, we just have to kind of accept, and that's what we have to foster in order to bring more and more people into the space.
Yeah, you're right. Thanks for sharing that. We have a few minutes left, so if anyone has any question to ask our guest today, maybe give a few more seconds. Also, feel free to, once the webinar is over, to suggest the other topic you'd like us to cover in future webinars. I'm always actually listening to the feedback I'm having to organize these webinars now. All right. I think there's no, there is, okay, there's one question. We don't have a lot of time, but we'll just take this last question. So from Ken, how do you assess headcount for your finance or accounting department? I don't really understand the question. Okay.
Yeah, I'd be happy to discuss with Ken after the fact as well. Yeah,
okay.
I think
maybe
that's very.
If you guys, yeah.
Go ahead. Yeah.
Please go ahead. Please go ahead.
I think we're out of time, but I'm happy to pick that up after.
Okay. All right. And for Jessica, we've been sharing some of these tools and documents. I don't know how comprehensive, if it contains like all the tools you need for your on-chain accounting, but I'm going to be sharing something with you on Slack. All right. So since we're out of time, I want to thank you all for coming today. So thanks a lot, Jaime, Jozef, and Michele, and thanks to everyone in the audience. I'll actually be uploading this webinar for everyone who missed out on YouTube, and I'll be sharing it with you guys. And again, feel free to let me know what should be the title of the next one.
Right. Thanks.
Thanks for having us.
coming.
Yeah.
Bye.
Bye.